Yo guys, if you use smart money and retail concepts to trade the forex market, you will never make money in the markets. You need to understand the way the liquidity lies in the marketplace and trade like the banks. I always move with the banks with this type of sniper entries. So in this video, I will explain how to trade with the banks. So first of all, you need to understand where will be the smart money traps. So if the market is moving in the uptrend, everybody will frame their buys from the order blocks. We use this as a traps. This is where millions of dollars of liquidity will be here. So what will the banks do is the banks will just manipulate the price and take out the liquidity, and then it will go in the real direction. The banks will take this liquidity out and we will enter here and follow the banks. This is what we exactly do in our mentorship students. We exactly enter here with very tight stop loss and target the next liquidity point. If you understand this type of trading, it will be very accurate. You will win more very more times and lose very less times. This is what you need in markets to make money. So I will show you the examples in the downtrend also. For example, if the market is moving like this, the downtrend, majority of the people will frame their sells from here. You should wait for the liquidation of the people and then enter here. This is where the real move happens. Always the real moves happens after everybody is taken out. This is how algorithm is designed in the market. If you trade the normal smart money, you will never make money in the marketplace. So I will show you some examples in this trend. Here, if you see, the trend has started here. This is the break of the structure. It's going up, going up, going up. So you should wait for the liquidity sweep and then enter liquidity sweep. If you see here, the trend has moving like this, like this, like this. Higher highs, higher lows. If you see here many people will frame the order blocks buy, right? But what happened? The market swept the liquidity and then it went up. This is just because it needs liquidity to move the markets, because liquidity is the fuel for the price. This is what I exactly teach in my mentorship. This is the liquidity inducement theorem that I have designed. I exactly enter here with the tightest stop loss and wait the higher time frame trend. Target the next higher time frame liquidity. This is how I trade. And don't trade like smart money. If you trade like smart money, you will hit the stop losses very more often. If you trade like me, you will make a lot of money from the marketplace. So if you see here for example, the trend has started here. This is the break of the structure. You can confirm the trend with the divergence. This is the real smart money indicator where you can know where the banks are doing. If the trend is going to reverse, this indicator will show. This is my private indicator with custom settings. It is only for my mentorship students. If you want to access my teachings and how to trade like me, you can join my course and then trade like me. If you see here, this is the where the downtrend has started. If you see higher highs, lower lows, lower highs, lower lows, lower highs. This is where exactly the smart money people got kicked here. If you see exactly, this is where the smart money people got kicked, right? So I exactly enter there. Here, just follow the trend. Tightest stop losses. Target the next liquidity. That's it. This is how we should trade the markets. If you see here again, there is another trade. Let me see. Same thing. Higher highs, higher lows. Liquidity grab. Another clean trade. And again, this is where the break of the structure happened and the real uptrend started. Again, this is the liquidity graph. We are going to upside, upside, upside. See here, again 15-minute structure got induced in the same day. This is the very high probable entries. This is where the smart money people will buy the market. This is the clear fucking liquidity order block. After the liquidity order block, can you see the big push, because this is push because of the news and the liquidity that was taken out by the OB. Target this liquidity point. See how much RR it was. Easy type of trading. This was very easy type of trading. Many people don't understand how to trade like this because they don't have that experience. If you see here again, the market has shifted its trend. Break of the structures, break of the structures. This is where the market higher high, higher low, liquidity grab. I will be in cells here at the top. I'm not showing my exact checklist here because that was only available to my students. If you want to learn the style I trade, you can join the mentorship. See, everything higher highs, higher lows. Again, the market shifted here. Liquidity grab. We can take sells. We can take buys. Simple things. Nothing complicated in this trading. And then this is where the real break of the structure happened. Now we should focus on the buys again. See here, this is how the trend is moving, right? Higher highs, higher lows, higher highs, higher lows. Then this is the liquidity grab. Mitigation. Again, you can be in the buys here. Simple thing. We should focus where the price is going. That's it. And target the next liquidity from the past. There is a liquidity from the past here. That's where the market reversed. Again, if you see here, the market changed the direction here. Break of the structure. After the break of the structure, we should need to see the liquidities. The liquidity exactly is here. Here is the liquidity. This was the liquidity and this was the order block. Exactly news hits in, the market got reversed. Here you will take SL because you will enter here. You will take one SL here, but at the mitigation I will enter again because I know there is no point, because in the Asian session a type of pattern is completed, so there is no point of taking the Asian high again and move down. So I will enter again and again target this liquidity. Again you can know the market in the high time frame. If you go to the 1 hour time frame, the market is moving up, moving up. So what you can do, you can simply take a buy because of the 1 hour time frame liquidities. Target the buy. Trading is very easy if you understand this liquidity concepts. Today, if the market swept this low, I will be in the buys, in this buys. But unfortunately, the market didn't sweep this low, so I didn't type in. Otherwise, I will be in the position every time. If you see this pattern happens, if you see here, market is in uptrend, higher lows, higher highs, higher lows, higher highs. This is how the market moves. Everything is already engineered in the price. Everything. This is how I trade the markets and the real professional traders trade. Everything apart is bullshit. You can't make money if you trade those concepts. It's completely scam. Everywhere the liquidity is induced before the real move. Can you see here? This is where the smart money people will frame their buys, sells, and it was taken out at the pip. I will be in the sells here. Never works. Smart money concepts never work. It's completely waste of time. If you are wasting your time, valuable hour, learning about the smart money and retail patterns, you will never, it's completely waste of time. You can never make money. You should understand my concepts, liquidity inducement concepts, in order to understand the real movement. Same thing, if you see here, this is the break of the structure happened, liquidity grab, mitigation. This is the real mitigation. The real mitigation always happens after the liquidity is grabbed. This is very simple things in the trading that many people don't understand. Again, same thing, break of the structure, liquidity grab, sweep, the market reverse. This is the very basic sense I'm giving into the liquidity concepts. There are lot of things you should learn in order to understand these things. I'm just showing you the basic stuff what I can show you. If you understand this, you can literally understand every move, why this move happened, because this liquidity is taken out, that's why this reverse happened, why this buy happened, because this liquidity is taken out. You can literally know why the move is happening, why this move is happening, why this move is happening, because it's liquidity. At the end of the day, it's completely liquidity. You can ask me why this move happened. I will simply tell, because this previous day's external liquidity is taken out. You don't know what the previous external liquidity means, because you don't have any idea. You are a smart money guy. If you want to learn these concepts, you should understand where the smart money people are getting trapped. You should use them oppositely. You should exactly trade oppositely. And you should exactly add some special indicators like this to understand what the smart money people are doing and then follow them. Everything is engineered. Consolidation, sweep, boom. Trading markets is really easy if you understand these concepts. For this December, I am giving you a huge discount. You can't find this opportunity anywhere else in the internet. For the $100, I'm releasing my course on liquidity inducement theorem. The time it will be it will be live only 30 days. My course. It's a one-time offer. After 30 days, you can't buy my course anywhere. So better use this opportunity and trade the market and make some money. Have a good day, guys. Peace.